All right, good morning and welcome. So I'm currently looking at the economic calendar. We're having ec- unemployment claims by 8:30 a.m. and there's um there's a FOMC speaker speaking at 2:30 p.m., which is the afternoon session. So let's take a quick look at price. Now, looking at this asset class, which is this US 500, this is the CFD for the S&P market. So now we've had this back and forth price action since the last week of January. So we've been ranging inside of this range back and forth after taking out buy side liquidity, which was resting above here. Now, when you cannot easily discern on a daily time frame where price is likely to go to next inside of a choppy body of price action, it is better to either you stay in your hand, or if you must trade, you trade a short term trade, which is you being in a scalper's environment. Unless you're a scalper and you've been trading for more than at least 3 years, you should not participate in this type of body of price action. Now, let's start with the NASDAQ. There's a reason why, but we'll discuss that as the video goes on. So this is what we have here on the NASDAQ. Look at it, this back and forth price action. So we've been trading inside of this range of this high down to this low. We've been ranging inside of this back and forth. So we took out buy side liquidity, which was resting above here from December 26th high. Buy side liquidity was taken here and price dropped lower, failing to take out this swing low here, making this a failure swing. Then price rallies higher, fills this volume imbalance, which coincides with this liquidity void. So a liquidity void is this, where there is no trading from the low of this candle to the high of this candle. There is no trading, and you also have this candles close here to this candles opening. So you draw this out in time, you have this, you have this. Now, if you look further to your left, this set of up close candles, you would notice that this right here is a volume imbalance, and here it's a fair value gap. So you can draw this out in time to further solidify and understand why price is inside of this. Price keeps coming to this range to rebalance and few pockets of price action. Now, one thing you should know, price above vacuums. What does that mean? Price above vacuums. So every time a vacuum is being created in price, the algorithm doesn't like seeing those kind of body of price actions. So for that reason, it must go to those, it must seek those points of interest in price action to rebalance those vacuums that are being created by the algorithm. These vacuums are not random. These vacuums are programmed and pre-programmed. Why is that? The algorithm makes use of these reference points, these vacuums, as reference points to deliver future price. For example, when this liquidity, when this void was created here, this liquidity void, and price dropped lower, this was not just left by the algorithm as just a coincidence, because the algorithm, now moving further, this is all hindsight now. Moving further, as you can see, this up close candle here from the January 30th candle on Thursday's candle, price rallied higher. The high of this candle was this low of this imbalance here, which was created here. So Imbalance acted as a resistance, resisting price from going higher, then drop lower. Then we had a close here. Then price opened lower here, then rallied higher. Now, what we can see from this body of price action is that these vacuums now, price is revisiting this set of vacuums now to deliver on-field body of price action so that this right here can become a balanced price range. Now, until this becomes a balanced price range, the algorithm is still allowed to stay here for as long as it wants. Does that make sense? So, before it is allowed to leave this area, this point of interest, it must rebalance these sets of imbalances here. This BC and this CB. This CB here is this volume imbalance. It is sell side. It is lacking in buy side delivery. It is the imbalance is on the sell side, lacking in buy side delivery, which we got here. But this rally higher was just a week, so it is not sufficiently balanced. For that reason, price traded on Monday, Tuesday, and Wednesday, rallying back inside of this imbalance. Does that make sense? Now, if you take the close of this candle to the eye of this candle, this long wick, this right here is an imbalance. The midpoint of this is the consequent encroachment, which is an imbalance. Now, I'll keep repeating myself when discussing wicks as imbalances because a lot of traders fail to acknowledge this phenomenon in price. When this wick was created higher, when we're having higher prices here like this, it is completely seen by the by traders as a quick movement in price, meaning there will be on-field body of price action inside of it. Correspondingly, the algorithm will see this week now as a separate PDRA, a separate reference point to reference for rebalancing. That is why the midpoint of this week's now is the consequent encroachment. So we're going to label this consequent encroachment of what day is this? 31st January week. Let's increase the alright. So today's trading Thursday, we've traded inside of this, we traded to the midpoint of this January week, meaning everything below this week here is a discounted PDRA and everything above here is on a premium. Now let's go lower to the 1 hour. So on the 1 hour time frame, is this the kind of body of price action you'd like to participate in? This is what I mean. We trade above this relative equal highs here, inside of this CB here, which is the down close candle. So we've traded inside of this CB, and if you look to this area, you have relative equal lows here, and just above here you have this relative equal highs. These are relative equal highs. Let's indicate this. Buy side liquidity, Below here, you have this relative colors. Also, you have these lows. But I favor this low first. So for that reason, we're going to indicate this as sell side liquidity. Now, as you can see, every time you can identify a 50-50 narrative in price, meaning we can likely from here go higher to take buy side liquidity, and also because we feel this imbalance here and we are currently trading inside of a ranging day, which is indicated by this new week opening gap. This gap here is a new week opening gap. So understand this coins video, you should watch the Monday's video, which is the 3rd of February. Understanding what we've been doing throughout the week will give you a clear, discernible understanding of what price has been doing all through the week. Now, as you can see, when we had this rally higher here, price failed to take this buy side liquidity target because we are inside of a ranging body of price action. And when you're trading ranges, you are you have to be careful when trading it unless it gives you a clear indication on where price is going to at that particular point in time. You do not want to push a button. It is better to preserve your capital. Like I said earlier in the previous video, your number one goal here as money manager or as money manager is capital preservation. Does that make sense? Right? So we're going to delineate the day's trading from Monday down to today being Thursday's trading. So on Monday's trading, we had this. Tuesday, we had this. Wednesday, and ultimately Thursday. So we're currently trading inside of Thursday's trading, and we're currently trading below the midnight opening price. We opened lower, and then rallied higher here. Quite trading to the upper quadrant of these imbalances, this set of imbalances. So we feel higher to these upper quadrants, to these imbalances. Now on the day's trading, you have this midnight opening. Here is your midnight opening price. You draw that out in time and you indicate this as midnight. Let's go lower to the what you're currently watching here is my inner dialogue on how I get a feel for what price is trying to do. I'm not seeking to enter a trade because it is not currently my time window for the morning session. So I'm getting a feel of what price is trying to do. So when I visit the chart later in the day, I would know where and how to engage price action if I am to engage price action. But indication from the higher time frames it has given me that it is price is unwilling to go for a clear discernible one-sidedness in price. Now, as you can see from the daily time frame, we had buy side liquidity and sell side liquidity. Price giving indications of it being interested in these pools of liquidity, which is a a clear reason not to participate in that kind of body of price action. Now, you also have this relative equal lows here, and also this relative equal highs here. All of this is price further indicating to you that the money session will be extremely chopping out buyers and sellers so as to prevent them from profiting in the intended move that price is trying to make. So here you have the midnight opening price. We opened here, rallied higher, then dropped lower below the midnight opening, then went higher again. So the London during London's trading, we had this choppiness in price. When price chopped back and forth, price came for this sell side liquidity, dropped lower. So we had this drop lower. So there's no narrative from the London session to use to continue trading the New York session. So for that reason, I'll be more interested in trading. If I'm to trade today, I'll be more interested in trading the PM session. So that is that. Let's take a quick look at the opening price for. So we opened here and dropped lower during the 8:30 open. 8:30 is a true opening price. So for that reason, you indicate that and you draw that out in time. Now for the power of three states that price creates an opening. If you are expecting higher prices, price would go lower below true opening prices, then before going for higher prices, because below true openings you have discounted PDRAs. It's a discount price. So I'm going to indicate this. This is buy side, and this relatively colors here. These are sell side liquidity. So I'll leave that and we'll revisit this during the PM session. So I hope you got something from this video. I'll talk to you tomorrow. Have a nice day and good luck, good trading.